Despite the fact that we're in a recession, Nasdaq stocks are still trading at high valuations. Meanwhile, we are in the midst of a possible financial meltdown with some banks collapsing and others possibly on the verge. That said, there is a trade that may look very attractive for the rest of the year to many traders. In this video, we discuss what's in store for IWM, the Russel 2000, and bank stocks the rest of this year. How are technology companies going to perform this year, and what is the best way to trade the Russel and the Qs going forward? We'll show you a real example on the option trading platform.
Hey guys, Darren here. Thanks for joining. We talk about action steps you can take today to increase profits and reduce risk in your options trading portfolio. Please check out and download the free options workshop in the link below.
It talks about the two main reasons why options can be less risky and more profitable than just buying stocks alone. It also details how to profit in both directions and pick your win percentage, which you can't do just buying stocks alone. Also, please hit the like and subscribe buttons below. I appreciate it and it helps the channel. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. What's in store for IWM, which is the Russell 2000, and the bank stocks the rest of this year? Financial services is a large portion of the Russell 2000 IWM ETF. It's about 15%. Even before the Silicon Valley and Credit Suisse bank collapses, all of the bank stocks have been hit due to the current economy and rising interest rates. However, this current turmoil in the banks will likely come to an end sometime this year. Some banks truly are too big to fail, and the government will do whatever is necessary to avoid a complete loss of faith in the banking systems worldwide. Unless we see lines at Wells Fargo and Bank of America running out the door with everybody pulling their money out, banks are on sale now, and here's why. When we look at the one-year chart for IWM, we see that it is at a low. We also know that the banks, a major part of the IWM index, have been hit hard. Now we can also go to FactSet Earnings Insight and look at the forward 12-month PE ratios and see that the financials in general are very low at 11 PE. So they're cheap, they're on sale. We also know that banks tend to perform well when coming out of a recession. Earnings growth was expected to turn positive in the third quarter of this year. It may likely be delayed now due to the recent events, but it will happen. Looking at the FactSet projected earnings growth for financials just prior to the recent collapses, we see that they were expected to be around 12 to 13% growth for the year. Revenue growth was expected to be great as well, with around 8% growth, the highest of all the sectors. The S&P earnings growth was expected to turn positive in the second half of this year. However, it may be delayed again a quarter or two now. We should still consider getting out in front of it while the stock prices are still low. How are technology companies going to perform this year? Well, the semiconductor stocks and technology companies are still pretty high, or at least fairly valued. I think the risk with the Qs is to the downside and not the upside. The PE is still fairly high at 27, so if we think the Qs have a chance of going down and the Russell IWM may go up soon, how do we trade that pair? What's the best way to trade IWM and the Qs? Let's look at placing a couple of trades on the Tastyworks platform. It's the best option trading platform. I'll put a link down below. We punch in IWM in the upper left while on the trade page. We select the May 2023 option chain since it's closest to 45 days to expiration. We select the bid to sell the 170 put and the ask to buy the 165 put and place a $5 wide put vertical spread. We collect $161 for doing this. We then switch to the curve mode by selecting curve. We see the profit zone in green. As long as the price stays above the 170 short strike, we keep the $161 that we collected up front when we placed the trade. Now let's look at a trade in the Qs. We open the same May option chain and select the bid on the 325 and the ask on the 330 to sell a $5 wide call vertical in the Qs. We collect $179, which is about 1/3 the width of the strikes and what we shoot for. We jump to the curve mode and see that as long as we stay below the 325 short strike, we keep the full $179. The trade has a 70% probability of profit. So overall, we are collecting the 161 plus 179 for both trades, and that totals $330. As you can see from this chart on TradingView, the Qs and IWM do track each other pretty well. However, the current spread is a little out of the ordinary, with the Qs up and the Russel down due to the recent banking events. This is a trade that I'm placing now in hopes that over some time through the rest of this year, the financial situation will improve.
All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Also, let me know what you thought of this trade and what you're trading in your options trading account. Thanks for watching, and see you in the next one.